Hi, this is Randy Finney with the right side of the chart, and this is an early session update for Tuesday, March 15th, 2022. It is 11:02 Eastern Time as I'm starting the video, and here's what we're going to go through. I'm going to talk on the equity markets real quick, including my thoughts on positioning right now. Quick update on crude oil, quick update, also very quick update on gold and silver. I'll talk on that MBII trade idea trade setup I set out today, and then the marijuana stocks. Had a subscriber inquire about the one of the pot stocks. I looked at them all. All right, starting out with the equity markets, let me give you my thoughts. Okay, so yesterday I gave you a long setup for active traders that want a game of bounce. That's still in play, and so far so good. I'm going to get to the shorter term charts in a second, but I'm going to start out here at the weekly chart. So on the weekly time frame, nothing's really changed. We're below the key moving averages. We're below big support levels that broke recently, coming off a big divergent high, so forth, so on. I've covered the markets, in great detail and with a lot of frequency lately. Now, let me say this. When I gave you the short-term trading up yesterday, I mentioned that I wasn't gonna, I'll game it my trading account, but not gonna game it or make any changes in the longer-term accounts. This morning, I started paring back some exposure, and I'll tell you why. Number one, first and foremost, biggest part is the Fed is on deck for tomorrow. 2 p.m. is the announcement, and then Powell will speak after that. So you're going to see volatility. We still have the divergences on the 60-minute and daily time frames. So there's the potential for more than just a quick bounce. I gave you short-term targets, which again I'll revisit on the Nasdaq 100 and QQQ. But all those positions, those swing shorts were very profitable and still are. And I just what I did is reduced quite a bit of exposure. Took some profits. I can always get back into those after the Fed meeting's out of the way or at any point thereafter. I just wanted to say that it's not worth, to me, the risk reward, especially with such a single event, can trigger a big move in either direction, can go either way. And then the other reason, one of the other reasons is, if you look down here, let me park this PPO, get it out of the way, and show you what the RSI looks like. The RSI, relative strength indicator, is a measure of how overbought or oversold the market is. We're at 33 right now in the weekly time frame. 30 is considered on most charting platforms, and on this indicator, that's the oversold level. And what I want to show you here is it is extremely rare in a bull market. In fact, we have only seen it levels this low. We're just above the 30 level twice since the last bear market. We go back here. This is 2000 and the 08-09 meltdown, right there. The market topped in '07 back here. Took a while, but didn't become oversold or that oversold. Actually, it was right here. Look, this right where we're at is where the first bear market rally started. So we had the first leg down that was from October highs in the S&P and Nasdaq 100. We have a big tradable counter trend bounce, and then the next big leg came down in the market, and then that's what it looked like. It was that 5-wave cycle. And so I'm going to take this line. Look, we're right exactly where we were back then. So even if I'm right and my targets are going to be hit, we could be looking at a significant rally. And again, maybe not. Maybe the bottom falls out of the market. Powell does something stupid or something the market doesn't like. But again, to me, it's all about risk reward. I would rather miss out on some gains than actually give back a lot of profits getting caught in a sudden swoon. And so there it is, guys. We're talking now, we're going back, well over a decade here in time. Because again, and then you can see that last oversold reading was there. So there it is. Let me just summarize this again. Back in early '08, we hit about the same exact level we're at right now. And then we were deeply oversold at the end of the bear market. That's capitulation type, meltdown selling. And then again, the only other times in since the bear market ended back in early 2009, and this great bull started, the only time we've been this oversold was right here in the bottom of 2000. 2008, 2018, the Q4 2018 meltdown right there was we got a hair lower, but darn close to where we're at right now. You can see the crosshairs. Look at the horizontal line. When COVID hit, we kissed the 30 level to the button, And so that's it. So, the market's like a rubber band. The more stretched you get, um, the stronger the snapback can be. Now we don't have a full tag, and again, I showed you before, we didn't have a full tag on the first leg down in that bear market of '07 and '09. Anywho, that's something to keep in mind, something to consider on your positioning, and just wanted to share my thoughts. And I always told you I'm flexible, so that's why, regardless of what I said yesterday about not touching my long-term accounts this morning, and it would have been preferential if I would have done it last night. And we gapped up today, opened up a little, nothing big, but we're out trading up today. And again, the way these divergences project, if they play out, meaning they play out for a rally that's commensurate or in line with what the divergences would indicate how big they are, it could be quite a rally. And it could be, again, just like back then, it could be a nice bear market rally that takes us back up, maybe another test to the 200 days, maybe a test to the bottom of the range. Maybe we just crap out and the divergences are taken out. But again, with the divergences in place and the oversold conditions, it is skewing the risk reward more away from, it's still, I don't know, closer to even. Hard to say. I don't want to even try to quantify it, but let's just say almost equal odds. And I don't like equal odds. I'm not going to bet hard on equal odds. I like to bet when the odds are in my favor. All right, so that's it. And of course, as I mentioned, I'm long in my trading account, so that should offset anything in the long-term accounts. But they're separate. They're separate accounts with separate goals. Let's talk the shorter term charts and we'll move on. All right, so there's QQQ, gave you that yesterday, QQQ and NQ, which I'll get to in just a second. There's our downtrend line. Here's our divergences that have been building here on the 60-minute chart, and they continue to build. Make indicators making higher highs, prices making lower lows. We're coming off that divergent low. Coming up, my first target on QQQ from yesterday, 326.80. Next target would be the downtrend line and/or that 334.74 resistance. They come in together, so that gives us roughly, just ballpark from where we're at today. We're up 2% now. If we hit the target, the 326.80ish level, that's another about 6.63%. And then if we manage to head on up there, that's another 3%. I doubt we're going to hit this before Powell speaks. We'll probably see some profit taking, on a day like this coming in soon. Probably at this first target would be my guess. Whether we pull back or consolidate, I expect a reaction there. And if that's going to be hit, it would probably happen after the Fed tomorrow. Anything's possible. You could see, if there's enough short interest in the market now, you're going to see more and more short covering as shorts do the same thing, reduce risk and take some profits, take some profits, cover their shorts before the Fed announcement. And remember, when a short seller covers a short, or you sell your SQQQ, same difference. They buy to cover. That's what you do. When you're short QQQ, you have sold shares you don't own. You have to buy those shares to close out the position. And to an effect, that's what the SQQ is doing. They'll use futures and derivatives, but it's going to have the same net effect on the market. So that's that. Near term, still looking for more upside. So far, so good on the bounce trade. This is it for NQ right here. Gave you that scenario yesterday. We're right about on the equal low, and I told you, favor, we could easily make a marginal new low, and it was so marginal, it's almost immeasurable. You probably can't even see it on the video, but we basically held the lows there. Slight, again, incremental marginal new low. Didn't change anything from a technical perspective, other than give you that little, I like to see those little flush out moves. It takes out the last of the weak-handed longs and might suck in a few more shorts, which give fuel for the rally. And so we're still on track. Haven't hit it yet, but I still favor a move up to that 13,380. I called it 13,390 yesterday. You may want to sell a few pennies shy, because if all eyes are looking at 13,390, a lot of times the sellers will step in a little bit early. You can hold out for the next target, whatever you want to do, however you want to trade it. But that's what I still think is the likely path. This, which we have most of so far, followed by a reaction and maybe another thrust up. But again, if we have that 3% or more, if we pull back, it'd probably be over a little more than 3%. It's probably going to take something bullish coming out of the Fed meeting tomorrow afternoon. Remember that again, nothing happens until 2 p.m. So you're up to date on the markets. We'll just limit it to the Nasdaq 100 for now because that's really my go-to trading proxy. Alrighty, next up would be crude oil. We have CL, which is let's look at the April contracts for now. Then the May's look similar. All right, so I gave you this level here. We had two trend lines, and this is the one so far. It's coming in really nice with that 94 to 95-ish support zone right there. You can see we have reactions starting back here at the bottom of that zone around 94. Reactions there, from below there, and more recently reactions there. So you have intersecting price support plus trendline support and a bullish falling wedge to boot. So at this point in time, it still looks like an objective long entry. We're right there where we were this morning. We're at the same level, about 90, just over the 94 mark. If it breaks, my next support's down here, 87.70. I do have minor support. I'm going to give you the line right now. I've noticed minor support in between there that could grab any pullback. That's about 91. So those are your support levels should crude break, and you can set your stops strategically below those if you want, or if you're not going to go long yet, you're waiting for signs of a reversal or a bigger drop. Those are potential buy points, especially if the positive divergence is still in place here on the 60-minute chart. Or the safe bet, I define myself, it's a made-up term, but I call it I'm an anticipatory trader. I will anticipate things before they even happen. Whereas a conventional trader, if they see a bullish falling wedge like that, they wait for a breakout above the wedge. That's your buy point. So that's your more conventional entry. The reason I'll take those in advance sometimes is if you get in below, it might be 3, 4, 5, 6% before the wedge breaks if we reverse. And so I can always and would plan to add, and I'll take starter position here, which is what I've done, and then I'll take another position if we break above the wedge, add to the position. And of course, if we don't, then I'm not gonna. We'll see. Everything is, I always say, the charts are dynamic; they're constantly changing, and I'll make a decision whether to pull out of this one, stop out, or add on to it. Okay, so that's crude oil. Let's talk gold real quick. And again, I'm going to go bigger picture here. We had some buy points that it fell to yesterday. We were a little below those now, but I told you recently, and I've said on several occasions, until and unless the breakout of the triangle fails, I'm referring to the big symmetrical triangle pattern on the weekly chart, then I still continue to view any pullbacks in gold as a buying opportunity. That's a big level there, about 174. We had it was price resistance, and also we broke above the triangle there. And if you zoom in nice and tight, you can see that we also have a little uptrend line here. This is a weekly chart. Every single candle except this one here has touched that trend line. The bottom of the candle has touched that trend line since the week ending Friday, February 4th, and we're still on the, this is a weekly candle. Today's only Tuesday. So if this candle can close back on or above, then that's bullish. It keeps that trend intact. So again, that's kind of bigger picture stuff is what I'm looking at in gold. And for now, the breakout is still very, very much intact. So no change there to my outlook for gold or silver. MBII, that's a trade idea I threw out to today. Aggressive, as I said, and if I can't state that enough. You trade a penny stock. Now, I've traded this one for years. You can go on the site, below the post that I put today. If you click down on the bottom, it says tagged, TAGGED, and then a semicolon, MBII. That's a hyperlink. It'll bring up all other posts. I've traded this one over on and off throughout the years. It trades very well, and it's always been a little cheap stock. We hit it, down here in the below $1. It comes back to that 85 level. It was great support back here. We had some reactions there. Most recently got rejected from 85 there, and so I really like it because two reasons. From a technical perspective, you have the both price resistance, 85 cents, and a downtrend line. I know this stock. I've traded a lot. Now one day it just may I may wake up to a bankruptcy filing if I'm long the stock and I'm going to lose money. That's why I don't put as much into this as I'd put into, say, Procter and Gamble or Apple Computer. Um, Apple Inc. Sorry. Anywho, that's the nature of trading these low price stocks. And guess what? You don't have to put a lot in it, because if I'm right and the stock pops and it hits my final target, it's going to go up 55%. Wouldn't surprise me in the least if it runs up here. This is in the ag input industry, fertilizers and stuff, and that they've been running the big name fertilizers. They're pulling back today, and there's probably some additional buy-ops in the sector. But again, this one. Will be a technically induced breakout. Oh, wait, by the way, nice divergent low and all that. And then you can go through them all. See, they rocketed with what's going on over in Ukraine. Mosaic, see, they have these strong surge. And there's a little profit taking coming in now, which is completely normal. But the fundamental outlook is strong. We're in one of the strongest commodity bull markets in many, many years. And that includes agricultural commodities. And these guys, the fertilizer companies and other ag inputs, they're going to be the beneficiaries of that. Scott's Miracle-Gro not doing so well, but the big ones, potash, and companies like Intrepid Potash. Big spike up, a little pullback here, and it may not be over. So if once this sector stabilizes, if we get another leg up, that would help that MBII trade, but it's not necessary. MBII, and there's other ones like Arcadia Biosciences that I've traded many times again over the years. Big spikes. We caught this breakout here, if I'm not mistaken, and that thing ripped 727%. That's correct. From the breakout, not from the bottom. That would have been much more than that. And you can see how well this little sucker just trades to the technicals. Trendline break, boom. Trendline break, boom. And again, that little boom right there doesn't look like much. I'll measure it for you. Breakout and back test. It was 117%. This thing has tried to break out, but it gets rejected. These are daily candles. They had an intraday break, closed back right around the trend line, traded on there again, and it's right there again. So it just needs to start taking, to clear this trend line, put it in the rearview mirror on a daily close, or another big intraday pop should do the trick. And this one's probably headed up here. I haven't updated. These are old levels. I haven't changed this. This line was created back in 2021 in November, and this one here also. So anywho, that's the one I'm looking at now. Like I said, is the MBII. And here's another one, Y10. This one's also a low price one, but this little sucker can run. You had a downtrend line breakout, and it's pulled back to trendline support. So if you're looking, there's one you could buy today at a pullback to trendline support with a stop somewhat below, maybe allow for a back test of the downtrend line, and see if the sector can get some more traction, especially these little second or third tier companies, I should call them. They're not like the big boys like Mosaic and some of those other ones, but they can run. They run a lot more when they do run. Last but not least, pot stocks. Okay, member Pengblood, I think this is the one you commented on, Aurora Cannabis, mentioning that it had divergence, and it does. And these guys have been in a downtrend way back when. This was my original favorite. This was way before there was any hype on the pot stocks. Before they took off, we started buying this one at 55 cents, and it went up. And it was the first official. It had two things on the site that made it a famous first. It was the first official cannabis stock trade, and it was also the first official penny stock trade. I'd never up to that point put penny stocks on the site because I know the risks and all that, but it was 55 cents, and we rode that thing up quite a bit. And but then back somewhere around here, I remember it was when Canada finally legalized. That's where I called pretty much a big major top. I said that's probably it, because for many reasons, fundamental. I won't go into that now, but they've been in a downtrend, and I'll hit them and run and highlight them here and there. There's hit and run trades. There's nice, look for these divergent lows, even in a downtrend, pop. And when ACB pops, it runs. This is, 118%. Pop that downtrend there, that downtrend line there, and it ran up another 200%. Then it put in a divergent high. See, negative divergence, positive divergence. This is where you want to go long at these divergent lows. Back here, last time it popped was right here. It wasn't much. It was only 22%. But now we have potential. And when I say potential, it means it's not confirmed divergence. The PPO is a momentum indicator. Right now, that momentum indicator is pointing lower because the stock is falling. It could continue to fall, and we may not have divergence. However, it's the first divergence in a while, and they all have it, and some are at support as well to boot. And so you can either there's no buy signals now. You could be aggressive and start to scale in and hope that the bottom's coming soon, but you might want to wait for some type of reversal, maybe a bullish engulfing candlestick or any other type of bullish candlestick reversal pattern. Of course, a break of the trend line, but to get up to the trend line from here, it's got to rally about 30% or so. Depends on if and when it gets there. I'm going to rifle through the rest of them real quick and just show you some other trade ideas in the sector. GC. This is Canopy growth. So you have some resistance way back here. You had a couple reactions there at about 484. We're a little above that now, but the same kind of setups. That's what I'm seeing here. Is you have this wedge here. You have a little downtrend line, positive divergence, and it could pop. And if it did, I'd target about 943. I think that would be your first resistance, potential target 676, but probably could make it up to 943 if it can get some traction. Tilray, TLRY, coming up on a decent support, 459, positive divergence like the others. There's your primary downtrend line. This one, again, I haven't marked up a lot of these charts other than just these divergences right there. That's 741-ish. Call it a little lower to be safe. 735, that'll probably be your first target. Weed.to, TO means trades on the Toronto Exchange. That's Canopy Growth Company. I already covered CGC is the U.S. shares. But that's for your Canadians if you want to trade it. Boom, boom, boom. That's what it looks like. I'd probably put a target down here, right about 1166. OGI, Organogram Holdings, same setup. See, positive divergence, downtrend line to pop. No buy signals yet, but certainly setting up, and they could run any minute. What you look for too, these guys, what happens is the momentum traders hit and run. They get in and out of this sector. You hit these things, you get in, and then don't be the last guy or gal standing at the party, especially when the lights come on. You know, it's time to get out of there. Don't hold too long. They fall just as fast as they rise. But again, these little pops, these little divergent lows, boom, they make for good trades. Boom, boom. This one probably run up to about right here. Look for these previous reaction highs. Right there, 356, 407. TGODF, the green organic Dutchman, same thing. There's your lines. MJ is the ETF if you just want to be a little more conservative. The individual stocks will run more than the ETF, but you have to take a shotgun approach to those. That's what I always say in the cannabis stocks, meaning I'll just take a half dozen or more of the best looking names, or you can do diversify by taking the ETF. MJ, rough targets on MJ if you want to go. Again, you're not going to get as much bang for your buck. 963, 1054, and probably that previous reaction high there around 11. That'd be at this point in time my max target, assuming they even pop. They're just like MBII. There's a difference of a trade setup and an actionable trade. Trade setup is a trade like MBII waiting for a breakout. MBII has to break above 85 cents, like I said in the original post. That means it needs to print 86 cents, not a print of 85, a print of 86 cents, and then it'll be a breakout or official trade. Alrighty, I guess let's wrap it up here. And that's all I wanted to cover. I don't want to keep these videos short and possible. Right now, like I said, near term, looking for a little more upside, at least in QQQ, possibly a lot more. We'll see. And again, I'll continue to update. I'll give you an update at the end of today if anything big happens. But this is post-Fed trading. Yesterday we were down big. Today we're up big. That's what I told you to expect during the week of the Fed. Market grinds around, and when volatility is high, 2-3% plus swings, daily swings are the norm. And so if you're not comfortable with that, don't trade. Get out of the market during a Fed week, and then wait till it's over to get back in. Or really, to trade when when the VIX is up, volatility is going to be high, even if the Fed, once the Fed is out of the way. Oh, and that reminds me. Speaking of volatility, I told you this morning I pared back some of my, the swing trend positions, and that includes, VIX, my VXX long, which is effectively a short on the market. This one I got lucky on. Waiting till today. I told you I would have been, better off, taking all those index shorts off last night. But this had some quirky thing today. The VIX didn't pop. This is the VIX, VIX, spot VIX. Right here, still about where it was, pushing against that 37.61 resistance. But we were given a gift today. We hit my fifth and final target, and it was legitimate. The VIXX ran up, and they had a volatility halt after that. For whatever reason, it popped this morning. Something happened. Something broke somewhere, but it worked to our favor instead of against us. It rallied up 43% since the open this morning to make a almost perfect tag of my right there. It is. I say these are unadjusted targets. You always sell a little bit below the number because you don't. The sellers step in early. I used to sit there and adjust the targets. It was time consuming. Confusing for some. You'd see the number there. So that is a just about a perfect tag of that level there, or at least an effective tag of the fifth and final target. And we put this on, gosh, I forget, somewhere in here. So that trade's good for about 100. We doubled 106%, somewhere in there. I don't know the exact entry point. You can look it up. But anyway, so that, yeah, it was TVIX trades short-term VIX futures, as does VXX. And is it TVIX? There's a couple out there. I didn't see any that had that similar pop, so it must have been something unique with VXX. And again, worked to our benefit. So congrats to those that caught it. Where we go from here, well, that's going to depend on what happens after the Fed. The VIX is hanging up there. We're still elevated. We're pushing against that big resistance level. This is the level I've had here. Target on the VIX. Remember, you can't trade the spot VIX. You can only trade futures on the VIX, options on those futures, or you buy an ETN that tracks the trades the futures. And 37.61, that's it. So if the market, if we're going to get another leg down to my next targets on the weekly chart, which are still very possible, you're going to see a big spike most likely in the VIX. Otherwise, if these divergences on the 60-minute chart pan out, we're probably going to come on down, and again, at least we're officially out of that trade now because we hit the final target. So I'll send something to close that one out. All right, guys, I'm going to wrap it up here. And again, if anything big happens today, I'll do an update, or if I see anything else that stands out. Otherwise, we'll pick this up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.